Hello guys, welcome back to a new episode, RALLYTOP Investing 3.2 SMC Masterclass here. In today's episode, I want to teach you a very simple, straightforward strategy that you can actually leverage on in 2025 to make considerable improvement in your trading. Now, if you are the type of trader that is desirous of actually making some good profits in the market in 2025, you need to stick with me to the end of this video, because in this video I'm going to show you the secret of the grandmasters, how the grandmasters in this industry make stupendous profits in the market. A successful trader is a trader who knows how to stack trades in the market. I'm not talking about random stacking of trades in the market. There is a strategy that is known as liquidity stacking strategy that the grandmasters in this industry have been using, and have been keeping it a secret. But in today's video, I'm going to expose everything to you for free. Just pay attention and stick with me till the very end of this video. Now, take a look at these two diagrams on my screen. You know that a high or low cannot be confirmed until inducement is taken out. And right here, you find the inducement being taken out to confirm this high. After the high has been confirmed, now how about your higher low in the case of a bullish structure? Of course, you know that the higher low in the case of a bullish structure cannot be confirmed just yet until price travels back up to take out this major structure high and close above it, and therefore your higher low can now be confirmed. I want you to know that the financial market is not about support and resistance. It's not about trend line, nor is it about all this rectangle and all that kind of stuff. The financial market primarily moves because of liquidity. So liquidity is the fuel that drives the market. Okay? Now, liquidity has been taken here in the form of inducement. And therefore, as price is coming back down, price wants to tap into an area of interest before moving higher. And where is your most probable area of interest here? It is this one, guys. Now, you may ask, is this not going to be an inducement? No, that is not an inducement. You do not actually need inducement anymore. Why is it? It is because inducement has already been taken here. So the big players in the market want to stack on this liquidity to continue to make profits until they engineer another liquidity in the market before they can begin to talk about liquidity or inducement. I hope you understand what I'm trying to tell you. So this becomes your high probability area of interest, and therefore you are expecting price to now come back into this area of interest, okay, mitigate out of it before moving higher. Now, as price moves higher to break this structure high here, take note of what is going to happen here. A lot of traders will be waiting to have inducement. Now, you do not need inducement again. Why? Inducement has already been taken here. So liquidity has been taken. The market moves because of liquidity. So liquidity has been taken. And as long as the smart money has not engineered any other liquidity in the market, you will continue to stack on the liquidity that has already been taken. So in that wise, this is your next high probability area of interest. Okay? And so you are expecting price to also do the same thing, come back to respect this zone before going higher. Now, sometimes when price goes higher, it does pull back, okay, and then go higher again. Now, this is where retail traders get confused, because the retail traders will look at this and say, well, this is a break of structure. Remember, this is a retail break of structure here, okay, and this zone here is still unmitigated here, this zone. And now the smart money has engineered liquidity here, because the retail trader will look at this as a break of structure, which is completely fine. And because the books have taught them that after a break of structure, there will always be an order block. Okay, the books have taught them that once price takes out a high or low, there will be an OB. And so they will mark their OB here. Now, the trouble here is this. The retail trader does not know that this is an engineered liquidity below here. So the smart money understands the trading psychology of the retail traders. So they purposely or intentionally engineered this liquidity here in order to trap the retail traders. Okay, so that's your inducement. And here you are, the retail trader have already placed their buy order here to go long. And so what do you think the smart money will do? Smart money will push price lower into this their zone. Sometimes they will pretend as if they are going higher, and before you know it, boom, taking out their zone here and take out this inducement, and sometimes tap into this unmitigated area of interest before going higher to break the structure high here. I hope you understand. Please try and follow this. Okay, try as much as possible to understand what I'm trying to explain to you. This is a video, you can go over it again and again so you can master what I'm trying to tell you here. Okay, so that's for the uptrend. The same thing for the bearish structure, just the same scenario for the bearish structure. Now take a look at this. Price has printed this low, this low. For this low to be confirmed, it needs inducement. And where is the inducement here? This is the inducement. And so price takes out that inducement to confirm this low. So this is our break of structure here. Now after break of structure, you want to mark your area of interest. High probability area of interest will be this one, guys. This is your larger order flow. This one is your larger order flow. But for you to refine this order flow, you can use this. This is your high probability zone, refined zone. Okay, and so you are expecting price to come into this refined zone, tap into this zone, and go higher. Well, you may ask, why is that? Why is it that this low has not taken liquidity? Why is it going down? Well, it is because liquidity has already been taken here. So the smart money wants to stack on this liquidity going down to take trades until they engineer a new liquidity in the market. And now you are asking, where is our area of interest here? Well, our area of interest is simply here. This order flow here becomes your high probability area of interest. Now, price will now go back higher to tap into this high probability area of interest, okay, and then drop. And after dropping, price can do something like this, okay, and then retail traders will look at this and said, okay, since price has done something like that, that means that this is a break of structure here. And the book teaches that after break of structure, then there will be an OB left behind. And so they will find an OB somewhere here, and they want to take their trade from there, not minding that there is a zone here that is unmitigated. This zone is unmitigated. It's still fresh. And therefore, what the smart money will do is to push price from here to this that zone. Remember, this high is the inducement, okay, for this low is the inducement. And here is the high where the retail trader have placed their pending order to go short. So the smart money will move price into their zone and pretend as if it's going down, and boom, takes out the zone, takes out the inducement here, and sometimes taps into this unmitigated order flow, and sometimes it just wake it and then boom, it goes down. All right, this happens every single day in the market. Go back to your chart and then you will find this every single day in the market. So I'm going to take you to the live chart and show you one or two examples. But the first thing I want you to really understand is that when you go to your chart, the first thing you need to do is to determine the bias of the market. Are we bullish or bearish? That's the first thing you need to do. Okay? That's the first thing you need to do. If you don't understand the direction of the market, it will become very difficult for you to stack trades. You can't begin to stack trades using consolidation market. Okay? That will not be a profitable way of trading. Now, remember, this strategy works on all time frames. On all time frames. But I'm using the 4H as my higher time frame here. All right? You can use this strategy on one single time frame if you so desire. But if you want to make or to get a better risk to reward, then you can scale down to your lower time frame and refine your zone and take trades from there. All right? But all you need to do is to follow the exact same rule that I'm showing you here now. So let me take you to the live chart and show you one or two examples. Now take a look at this. This is clearly a bullish structure here. And before you know it, we are having something as if it is a bearish structure. Here is bullish structure, clear bullish structure. So let's know what is happening in the market. What's the structure of the market now? Now the first thing we need to do is to identify our most current structures in the market. Take a look at this high. For this high to be confirmed, it needs inducement. And so where is the inducement here in the market? Well, look at this. This becomes your inducement to validate this high. So now inducement has been taken. So this high can now be validated. So this is your major structure high. That's your major structure high. Now, where is the higher low before this higher high? We need to find that. Well, this is not a higher low. I mean, this is not a high. This is not a higher low because it didn't take out any inducement. And therefore, look at this one. This high was printed and price pulled back and went back higher. Okay? And when it's coming back down, look at this inducement. This small inducement here. It took it out. Can you see that? It took out that inducement to confirm this high. So this high becomes your valid high in the market. And where is your higher low now? This is your higher low. So we mark it out. If price comes back down to take out this higher low before this higher high, that will mean change of character. So as you can see, that happened here. Price took it out and closed below it. So that's change of character. So we have been converted now from this bullish structure to bearish structure. Now that we have been converted to bearish structure, we want to look for sell opportunities. And therefore you need to look for your low, your valid low. Where is your valid low here? Well, this is not a valid low. And price printed a new low. For this new low to be confirmed, it needs inducement. Here is the inducement, and inducement was not taken out. Let's see. This is the inducement. Unfortunately, inducement was not taken out. Okay? Before price now came, created this low. For this low to be confirmed, it needs inducement. And therefore, this inducement is transferred from here to this point. Simple. So that's your inducement in the market to confirm this low. So this low now is confirmed. This low now is confirmed. All right? So this is our high. Now, if that is our high, where is our low? Let me just zoom in again. So that's our high. Now, after that high, remember, price has broken structure here. And this is known as break of structure. Even though it broke it with a candle wick initially, but this candle closed below it to validate this as a valid break of structure. Okay? Now, after that break of structure, remember, inducement has been taken. Inducement is a form of liquidity. Once inducement has been taken and price goes back down, in the case of this bearish structure, to take out this current low here and close below it. Now, you do not need to wait for further inducement. You want to stack on this inducement here that has been taken. You want to stack on this liquidity here to take your price lower. And therefore, like I showed you on the diagram, where is your area of interest? Now, this low is lower than this very previous low here. So this is your valid zone. It's your valid zone here. Give a buffer okay, to your trade. So that's your zone. So we are expecting price to come back and tap into this zone and we go lower. So let's play price and see what happens. Okay, so as you can see, price has tapped into it and it's now, let's see whether it will hold price. Let's not conclude. Okay, so as you can see, this held price. So this would have been your trade here on this single time frame. You can replicate this on the 15 minutes, on the 1 minute, on the 5 minutes, whatever time frame. Like I said, if you want to further go down the time frame in order to get a better risk to reward, you can do it, but using the same exact strategy. Simple. And then price has broken structure here. We need a valid break of structure. Now it took it out with a candle wick. We want to see a proper break of structure by candle closure. And so let's continue. Okay, so now we have this break of structure here, okay, to confirm this one. All right, price closed below it. And now, once there is a break of structure, where is your area of interest here? Well, this is your area of interest. Do you need inducement? No, you don't need any inducement. This becomes your area of interest where you can take trades from. So let's see whether price will come back into it. Okay, so as you can see, price came back into it. Let's see whether it will go our direction. So as you can see, it has already gone to break this low here. Can you see that? That's the second position you would have entered in the market. Okay, it broke structure there again. And now, because it has broken structure there again, what do you need? Do you need inducement? You don't actually need inducement. So what you need is to mark out your order flow. The last buy before this sell that led to break of structure. Where is it? Is this one here, guys. This is the last buy to sell. You can place your stop loss just above this high, okay? Because sometimes they can push price to that point. If you like, you can do it here, okay? So that's your high probability area of interest. We refine it from this larger order flow. I hope you understand. So let's see whether price will go our way. Okay, in this case, price did not tap into our area of interest. But remember, price created something here. This is a liquidity here, guys, in the market that the smart money has engineered. So let's look at it. What happens? Let's continue. Okay. Is there any? No. Let's continue. Okay, let's see what happens. Inducement has been taken now. Now, this zone is still fresh. Let's see what happens. It taps into that zone. Can you see that? Because the smart money engineered liquidity here. The smart money in these two other trades did not engineer liquidity. So we entered it direct. But in this case, they engineered this liquidity and we take our trade from there. Let's see whether it will go our direction. Can you see that? This is where we are targeting, and price has taken it out with a candle wick. So we would have made some good money. This is 3 trades now. 1, 2, 3. Can you see? This simple way to trade in 2025. You don't need to stress yourself. Simple way. The same exact thing I'm doing on the 4H, you can replicate it on any time frame. Let's see whether we can have one more opportunity. Now, remember, we still need to wait for price to close below this low here. It merely wicked. It didn't close below. Okay? So, but it has smashed our take profit here because this is our take profit. But we need to wait for it to close below or price goes back up to take out this high. Simple. Let's see what happens. Okay, can you see what is happening there? So price now took it out because there was this wick here indicating that the bears were not ready to further push price lower, and so the bulls took over and pushed price higher, okay, to break this high. Remember, this high is not our valid high. It's not a valid high. Why? Because for this high to be validated, it needs to close below this low. So it didn't close below this low. So where is our next high? Our next high is simply here. Until price closes above this high, we are still bearish. So let's just play price and see what happens. So it appears price has taken out this low. All right. So we are still bearish. It appears it has taken out that low. Yes, that low has been taken. Can you see that? So now that the low has been taken, okay, do you need inducement? Well, in this case, you will like to see inducement taken. Why? Because it has taken out the major structure low, high here, and close above it. So you will want to see inducement here before you take any trade. I hope you understand what I'm trying to say. And where is the inducement here? Well, your inducement is simply here. Simply here. So if price takes it out, then we know what to do. Okay, so as you can see, price didn't go to take it out. It created a new low here. And so inducement can be shifted from here to this point. Well, this is where we're going to stop. I'm not going to continue because of time now, but this is the simple way of you trading the market in 2025 and really make some very stupendous profits in the market. Okay, if you follow these steps that I'm showing to you, at the end of 2025 you will thank me for it. Okay, but if you are new to our channel, please consider subscribing and turn on the notification so that anytime we publish a new video, you'll be the first to be notified. And if you haven't joined our free Telegram channel, please do so just immediately, because there you have valuable contents that can benefit you, can improve on your trading. Okay, it's completely free, so you can join. And if you want to be part of our VIP community, the doors are still open for you. Okay guys, thank you for listening to me. I see you in our next educational video.